you're looking for high quality day trading education and professional level trade dissection and analysis, you've come to the right place. I'm Pat Mitchell. I've been a professional day trader for the past 11 years, and I'm here to do exactly that. Give you high level, professional level, quality day trading education, all for free right here on YouTube and on X. And today we're going to be discussing something that is really overlooked. It's about the patience side of trading and really stalking your prey and why we stalk and why we do the things that we do in order to set ourselves up for success. I think a lot of day traders, when they're first getting into this, one of the biggest issues that they have or things that they just don't think about is they're so focused on the now that they're not looking at how plays can potentially set up. With the way that this market closed here, I already have the next 3 days mapped out where I'll know exactly, as long as, you know, within reason, within tolerance. Obviously, we don't know what the market's going to do. But the way it's looking, it is looking like X, Y, and Z are going to happen. And for the next few days, I know exactly how it's going to line up. And remember, I've been doing this a long time, so I have the ability to do that. And that's why I do these videos for you guys. So then hopefully you can pick up on a few little nuggets that I give you and add to your toolbox. And then hopefully you can implement them in time. So give me a sec. I'm going to fire up these charts. We'll rock and roll. Hopefully you guys all had a great day. I know we did. So this was day 2 of day trading live, doing some test runs as I'm running 2 simultaneous screen shares at the same time, plus trading, plus giving guidance in 2 different rooms. It's a lot going on. So I have sized down over the past couple of days, as any professional should or would. So the very first trade that we took was we executed the trade short on Qs. Yeah, that was the first trade. So first trade opens up, pops up into this level, execute that level as it's pushing up into this pre-market range. That's where I started in, added as it came into that level, and then simply paid myself on the wash. And when it pops back up, pulls back a little bit, I pay myself the rest of the trade. Now you might be wondering, well, why didn't you hold? Like, that's a real small trade. You might be right, but in Momentum, which is my live trading service, what I want to show people is how to be incremental with your trades. It's about locking in. A lot of traders struggle to basically lock in on their trades, which ultimately results in them in very low profits throughout the year, as well as horrible consistency, which is most likely why most of you guys are here. So what we look for is a secondary opportunity. Now, we ended up getting it later on, but because at that time, SPY is still hovering in and around support, Qs is still hovering in and around support, it makes it difficult to trade it short. And that's ultimately where and how we would have wanted to do that. But at the same time, before that happened, there was a long. So one sec, I think it was that one. Yeah. So as we come down into the level, it bounces, pulls back. I'm looking for confirmation. As it's coming back down, I enter. And this is a lesson. So I told members, like, it doesn't matter whether this one works or not. I'm going to show you how to manage the position live. And when it comes down into that level, I start in. As it washes through, that's where I add. And then I get out fully on the retracement. So locking in an additional $300 on that. So just kind of racking up small gains throughout the day. And then this was the last trade. And it was a trade short. As we wash out, we pop back up. Now, I was looking for it to come fully into this level, which it did. So this trade, the timing was off. And you got to remember, timing is super important when it comes to trading and capturing the big trades. Now, I missed that trade because ultimately, and my target was the previous close. So it came and it did exactly what I wanted it to do. Came right into the exact bottom tick, that target. The problem is the timing was off. So what happened was we dipped, we popped up, and it pulled back, and then we had numbers come out. And then numbers ramped it up a little bit higher. And then finally it came in. Now, I could have continued to stalk this, right? Because I even said after that, yep, this now it's going to go into the previous close. It'll come down and fill that gap. But at what point is enough? Like, and I've seen way too many traders when they post all of their entries. You see them take like 10, 15, 20 fucking trades in a day. That you are exposing yourself to such a level of risk every time that you enter into the market. You don't want to be taking 10, 15, 20 trades a day. It's silly, is what it is. What you want to be doing is stalking your prey. You execute, and if it works, it works. And if not, at some point, you got to call it quits, right? Because if you were wrong then and your timing was off then, what makes you think that your timing will be on a minute from now, 5 minutes from now? It's always thinking about risk. Risk is something that is so grossly overlooked. I see it everywhere with people's trades. Any one of you could send me your entries and I can tell you within 2 minutes flat the exact issues that you're having and why you're doing what you're doing. And this is why it's so important to work with a coach. And for those of you that want to learn and are tired of spinning your wheels, come to tricktrades.com. If not, that's fine. Enjoy my free content. That's why it's here. You just got to like and subscribe if this is your second time returning to the channel. It's a pretty even trade, I think. But ultimately, before I wrap this one up, these big moments, these big trades that we'll all be a part of in our career, it's for a lot of people, it's luck. They just happen to be in the trade. Where I like to take more of a proactive approach instead of a reactive approach. I like to stalk my prey. I like to start looking and edging in. For the past couple of days, few days actually, what I've been doing is I've been bottom fishing. I used this term yesterday. And what I'm doing is I'm looking for that long. And I knew that's the thing. Like all of this was said even at 9 a.m. East, even before the market opened. If we can get this low level here, that's what you want. Because what happened on SPY from highs, and I talked about this as well, right from highs all the way down to lows is 9.99%. That's 10%. 10% is a correction. So a lot of people put a negative context to the word correction, and they think that that's a bad thing. It isn't. In fact, it's a really, really good thing in the eyes of an investor. That correction price point or percentage point is an area where they can safely add into their positions and get money in. Remember, a lot of people think ass backwards when it comes to money. Even people that have, might be working decent jobs and stuff like that. A lot of people are really ignorant at how to look at money. And again, that's not being condescending. That's just how it is. I used to do the same thing. And a lot of people, when they're investing, they're always expecting a return. Now, it depends. When you have an abundance and, an abundance of money, and you need to look at where to put it, it's not necessarily always about gaining on that money. It's about holding. And whether it's plus, minus 5, 10%, it doesn't matter. Okay. And that's what a lot of investors that actually have money. I'm not talking small time retail investors, right? Like where it's like, 50 grand, 20 grand, whatever the amount is. And I know most people think that's not a lot of money. In the eyes of the market, it's very small. So when you're talking about millions of dollars that you need to park somewhere, right? That you need to hold, you're looking for safe areas. It doesn't need to always come up from that price point. It's looking to get the best place, the least amount of risk, and the best opportunity to hold your money even flat. It's just about parking money. And too many people think about gaining money. And yes, of course, that's always a goal. We always want to make more money with our money, but that's not actually what they're looking for. They're looking to safely park their money into places. That's why they put money into SPY and Qs and ETFs, the market basically, because they're looking to park their money. And that price point starts at 10%. That is a place where you can reasonably park your money. And within reason, you'll be all right. Plus minus 5-10%. Because what's 10% away from 10%? 20%. And why do I say that? Because 20% is where, generally speaking, where we may wash a little bit more, but that's where we come back up. So you start in at 10%, you add in at 20, and you keep going on increments of 10%. Keep that average tight. And it's about parking that money. So right now, I'm stalking my prey. I want it lower. Personally, I want it lower. I have a certain amount of money that I have set aside. It's a large amount of money that I will start averaging in. And I've done a video on this, and I've told you my exact price points. So that's what I'm going to be doing. That's what I'm looking for. If it does bounce here, so be it. There's always another opportunity. I'm never in a rush to get my money in the market. If not, it can sit in the bank and gain me interest. It's all good, right? So on that note, I hope you all have a wonderful day, and I'm going to see you all tomorrow. Make sure to like and subscribe if this is your second time viewing. You have to. Them's the rules. And for those of you that are tired of spinning your wheels, come to tricktrades.com. Adios.